Let's do some trading with Dan Deming, Managing Director at KKM Financial. Dan, this Tesla move it's a beauty. If you're bullish, it's extraordinary. Exactly. So, are there infinity strikes in Tesla that you can trade?
You know, I think they might be contemplating listing those. Yeah, exactly. Impressive, to say the least, Oliver. And I think, you know, it is interesting, as you mentioned, because of some of the recent headlines, as you and Michael discussed, you know, with some of the issues with certain cars. But the bottom line here is, I think that the inclusion in the S&P, I still think these index funds are underinvested. There's got a lot of stock to buy between now and the middle of December. And I think that's really the big catalyst here for the next leg up in Tesla, because the idea is that in order to be included into the S&P, there's still a fair amount of stock to buy to get it to the weighting that it should be.
So, Dan, when you look at this, I mean, it's just, even if you don't like Tesla, it's how do you even get in front of that, right? I mean, where is the opportunity within volatility? I mean, do you even want to sell vol to the upside when it can rip just as fast higher as it can drop?
Right. I mean, I don't think so, Oliver, not at these levels. And again, because you're looking at an 80 plus volatility implied vol on most of the option strikes. So that infers effectively let's say a little over about a 5% move on any given day over the next 30 days. So, you know, that's substantial. But again, we've seen Tesla's up 3.5% today, you know, and so even with the mid 80s in the implied vol structure, you know, that's still not necessarily, I think, enough for these intraday and daily moves, particularly if they staircase on top of each other, like we've seen Tesla basically from November 2nd till now, from 420 up to 595. So no implied volatility level is going to cover you if you're trying to, again, capture some of that premium decay. So really, Oliver, what I'm looking at here is a pretty straightforward trade. It's certainly an example where it's not for the faint of heart, because you do have to put out a fair amount of money. But again, you're looking at lofty premium levels because you're talking about basically a $600 stock. So I'm looking at a January call spread, Oliver, again, just to kind of maintain exposure to the upside, cover some of the costs of just buying a call outright, because there is so much premium built into those calls. And I'm looking at the January 560, 690 call spread for a trade example, and you can put that on for about $44.50. So it's got about a 3-to-1 risk, a 3-to-1 return profile, and again, defining the risk to some degree to the downside. And the intrinsic value on this right now is about $11 above where the stock's trading. So you're not paying too much over where it's currently trading to get into this trade and still have the ability to participate to the upside.
So you're selling the 690, you're buying the 560, which is already in the money, the 560 part. The 690, I mean, it's still a pretty far ways away. And look, even by Tesla standards, you still would have another, $70 to go from here. And you'll be able, even if it does start to move in that direction, you're going to capture most of that on the way. And you've got pretty good risk to reward, like 3-to-1 on this.
Yeah, it's a little over. I mean, it's basically, you're putting out about $44.50, and if this thing goes full value, $130. So, you've got basically just playing for that continued upside. I mean, as you mentioned, looking at ways to try to, again, play for premium decay, I think is just a challenging environment for that right now when you look at trade examples. Also, even if you were to put on like a condor or play for a range to the upside where you start to get taken out of that position if we go too far, with these types of moves, that's a high probability right now. So I think it's better probably in this situation to define your risk and then still, again, look for opportunities here to probably participate with the trajectory and the momentum in the market. I think fading this right now, I mean, it'd be a challenge because I think you're going to have, again, you're going to be tested heavily if you were to do some kind of trade example or trade position where you're fading this move.
Okay. All right, I like it, Dan Deming. So, way to get long Tesla here and find opportunities with the options, selling that 690 call to help finance ownership to the upside.
Right.
Good stuff. Tesla
Thanks,
on the move
Oliver.
again, 4%. Appreciate it, Dan. Thank you, sir. Happy Thanksgiving, a belated one. Mr. Deming is Managing Director at KKM Financial, a regular trader here on the network. Thanks again,